Today, we had a surprisingly low PPI report. This is a good sign for tomorrow's CPI report. And here in this video, I will go over Wall Street's expectations for CPI tomorrow morning and how it will move our markets. Meta is planning on cutting 5% of its workforce, and Elon Musk is rumored to potentially be buying TikTok. The NFIB Business Optimism Index has surged to its highest level in 6 years. And Biden is set to announce an executive order to advance AI data centers on public land. That one's fascinating. I will share all of this with you and much more in this video. Welcome back to the channel and welcome back to your January 14th, 2025 stock market update, in which I will also share with you technical perspectives, technical analysis, if you will, on the S&P, the RSP. We'll look at the bond market. We're going to look at just how negative markets are, percent of stocks trading above the 50-day moving average, general sentiment barometers like CNN's Fear and Greed Index, and much more. So if you are a stock market investor, kick back, relax, enjoy yourself, something to drink, and let's get into it. Because tomorrow is going to be a massive day for markets. One would say a make it or break it kind of moment for stocks. That is because tomorrow we get CPI. Now, PPI tends to kind of follow CPI. PPI comes out first every time, and then CPI comes out afterwards. And if PPI comes in lower than expected, CPI normally comes in lower than expected. And boy, were these numbers a shocker today. So that was better than expected. Core PPI month over month came in at 0% versus expectations of positive 0.3%. This was a big downside surprise for PPI, especially for core. Core PPI year over year came in at 3.5% versus estimates of 3.8%. So another big surprise there as well. Walter Bloomberg on X wrote this: does weak PPI mean weak CPI? Weak PPI means weak CPI. Not always, but often, writes Brent Donnelly of Spectra Markets. Recently, it's somewhat rare for the Labor Department to publish PPI data before CPI data in a given month, but before 2018, it was the norm. Looking back at 10 years of history, when headline and core PPI both fall short of expectations, as they did in this morning's release of December data, CPI for the same month has come in hot only 21% of the time. In such cases, it meets expectations 39% of the time, and it is too softer than expected 39% of the time. Donnelly finds that suggests that Wednesday's December CPI is now less likely to come in higher than Wall Street expects. Economists had been expecting a 0.3% rise in consumer prices. So 21% of the time, CPI comes in hotter than expected. 39% of the time, CPI comes in better than expected. And 39% of the time, CPI comes in at expectations. Whenever PPI on core and headline, month over month, come in lower than expected. So basically, the odds are better today of a weak CPI report coming out tomorrow. Now, Nick Timmerhouse on X posts the CPI predictions or targets from your major banks every single CPI report. Now, he says economists who produce detailed inflation forecasts expect the December CPI to show that core prices rose a bit less than in November, up 0.26% to hold the 12-month rate at 3.3%. The median forecast has headline CPI rising a bit more, pushing 12-month inflation to 2.9%. So, median forecast here. This is the important column, this darker black column here. Core CPI month over month is expected at 0.26%. So that would get rounded up to 0.3%. So when we look at trading economics and you see this core month over month expected number at 0.3%, it's just being rounded. Okay, so in all reality, you're expecting 0.26%. Last month, we came in at 0.31%. So as long as we're lower than 0.31%, I think it's a good report. But especially if we could come in at 0.24 or lower, you're going to get rounded down to 0.2. And that's going to look really good on the headlines. Now, if we get a big downside surprise number, then that would be really good. Am I going to bet the farm on that? No, but it is possible. If we take a look at core CPI, the lowest estimate here looks like Employ America at 0.21%, and then Barclays at 0.22%, Wells Fargo also at 0.22%. The highest estimate here on this chart is Pantheon Macroeconomics at 0.32%. So that would be bad. Okay, 0.32%, something that shows a acceleration of inflation on a month-over-month basis, is not going to be good. I have found that Barclays is actually pretty accurate most of the time when trying to project CPI. So if Barclays is correct, positive 0.22% would be great news. And really, as I said at the onset of this video, this is a make it or break it kind of CPI for our markets. I mean, we're sitting at this 100-day moving average, okay, which is at 578.98, which is basically 579 or so. You're sitting at 580 on the SPY. If we get a bad CPI report, then that opens Pandora's box for Fed expectations, for inflation expectations, that maybe the Fed could be hiking rates in 2025 if inflation gets too hot. So that's the issue here. Now, I personally think, as I thought about PPI, that CPI is going to come in lower than expected. Now, in the news late yesterday, around 5 p.m. in after hours trading, it was reported that the Trump team is researching and potentially might implement a stepped up tariff basis. Meaning, if we're going to slap a 10% tariff on China, we could actually see this implemented like 2% per month. So instead of 10% being slapped on immediately or at a certain date, it could be 2% every month for 5 months, which did calm some fears about tariffs causing inflation, causing this, shock to the economy. That is part of the reason why markets ripped higher into the end of the trading day yesterday and continued to move higher into after hours trading yesterday. The reason stocks are trading lower today is mainly big tech. Apple's down 0.5%. Microsoft's down 0.5%. Amazon's down 1/3%. Google's down 1%. Meta's down 2.5%. Nvidia's down 1.5%. And Netflix down 1.16%. The RSP, which is the equal weight S&P, is actually up around 0.5% today. So as I've talked about here on this channel for a while now, there's this headline risk for the S&P because of big tech, because there's not a strong reason to own big tech right now. And you're seeing that playing out in real time. Now, it is also being reported that Canada is ready to buy more American products to appease Trump's tariff threat, says their ambassador. Hillman told the AP that, quote, he has a negotiating style which involves positioning himself in the best way he can for discussions. I think that is what this is. And announced just about 30 minutes ago, Trump says he'll create, quote, an external revenue service to collect tariffs. President-elect Trump said he will establish the agency on Inauguration Day with the goal of making other countries pay their fair share. And the dollar falls on a report the Trump team is mulling gradual tariffs. Now, that is positive. Imagine if you are a company like Apple that sells iPhones in China, but you are a US company, so you report earnings in US dollars. Well, when the dollar is strong versus global currencies, that's not good. Okay, you heard a lot of this in like 2023 when the dollar went up 20%. on earnings calls, it'll say on a constant currency basis, meaning that, the dollar went up, so it negatively affected company earnings. You've seen this, heard this a lot in 2023 when the dollar was on a tear. So basically, Apple sells an iPhone in China for, call it 10,000 won, which gets converted back to dollars, which is, let's say, $1,000. Well, if the dollar is weaker, Apple still sells that iPhone for 10,000 won, but they can potentially convert that back to 1,100 or 1,200 US dollars if the dollar is weaker. So a weaker dollar means potentially stronger multinational corporate earnings, which is basically all of your big tech stocks. Now, some other companies as well are going to also, do business in foreign currencies and bring that back to US dollars. It was actually reported that up to 50% of US companies are doing business in foreign currencies that would benefit from a weaker dollar. Now, in other news today, Biden is going to ensure power for AI data centers. Biden will use an executive order to provide federal support for advanced AI data centers. The plan includes leasing federal defense and energy department sites for gigawatt-scale centers powered by clean energy. Companies using these sites must buy US-made semiconductors as part of the agreement. By 2028, AI data centers are expected to need up to 5 gigawatts of capacity. Biden emphasizes this move is crucial for U.S. competitiveness, national security, AI safety, and clean energy goals. Additionally, export restrictions on AI chips will tighten to limit access for adversaries like China. We've recently had NVIDIA and other semiconductor companies come out and say restricting who can buy chips is not a positive thing for the US. It actually hurts the US. Also being reported today, Meta is planning to cut 5% of the lowest performers according to an internal memo. That is the reason why Meta is down 2.5% today. Because why are you looking to fire people? Well, you're either trying to boost profitability or your business is slowing down. Maybe both. Now, small business optimism is surging to now a 6-year high today. Importantly, hiring plans in December were the strongest since October of 2022. The NFIB says, quote, small business owners feel more certain and hopeful about the economic agenda of the new administration. Now, typically when economic index with small businesses is moving higher, it's usually a good time in the economy. It's usually a good time to be invested. When it's falling or plummeting, well, you don't see that too often. And when you do, it's during recessions. We've been very low for a while, ever since the election. That's when optimism really took off. Annie Dayan on X says GDP is 3%, unemployment is 4.1%. We have entered an era of higher productivity. That's where we stand now, and small business optimism is exploding higher. And you're bearish? Bank of Japan's Himino to discuss a potential rate hike coming next week. Fed Schmidt said today, regarding tariffs, the Fed will act if there is disruption to either of its mandates. And talk about everyone flip-flopping here. Musk, which was always for Trump to begin with, Zuckerberg and Bezos will attend Trump's inauguration, according to NBC. This is probably trying to get on the right side of Trump and hoping for a tariff exemption if that happens. I'm surprised Tim Cook's not expected to be there because Apple, would be under a lot of pressure if they do not get a 2017 similar tariff pass card from Trump, like Apple got in 2017. That's why Apple wasn't affected by tariffs in 2017, because they were given a pass. Now, it's also being reported that China is considering selling TikTok, at least the U.S. operations, to Musk, Bloomberg is reporting. Now, a TikTok spokesperson said in an email to CNBC, quote, "We can't be expected to comment on pure fiction." So at this point, it doesn't look like That's something that's actually being discussed, but this is a contingency plan. That's one of several options China is exploring as the U.S. Supreme Court determines whether to uphold a law that could effectively ban TikTok in the U.S. That ban is supposed to start January 19th. So just 5 days from now. Now, the percent of stocks trading above the 50-day moving average is currently at 27.7%. So effectively, you have 73.3% of all stocks trading below their 50-day moving average, even after what feels like a decent little bounce, at least from the lows we've been at. The S&P has bounced at least a little bit from that 575 low. Markets are still in a very weak place. You can even see CNN's Fear and Greed Index is at 27. As long as we are not entering into a bear market, this is a massive buying opportunity. We do have some earnings this week as well. Today in after hours, you have Applied Digital or Applied Blockchain. That one's going to be interesting. That is a data center play. But we start big major banks earnings tomorrow morning. JP Morgan, Citi, BlackRock, Wells Fargo, Goldman Sachs, and BNY all report tomorrow morning. Thursday in pre-market, TSMC, United Health Group, Bank of America, Morgan Stanley, US Bank Corp, First Horizon, PNC, and M&T Bank. Thursday in after hours, you have JB Hunt, Bank of Ozark, and RF Industries. And then Friday, you have SLB, Regions, Fastenal, Truist, State Street, Citizens, and Independent Bank. But I really think CPI is the massive catalyst right now. If CPI is bad, markets are going to plummet. That's just the bottom line. And once you break below the 100-day moving average, you normally extend lower, sometimes to your 200-day moving average, but you pretty much always fall lower if you break that 100-day moving average. That's where you tend to get more of a flush out in markets. So the move could be rather aggressive if we break below that 100-day moving average. And honestly, a retest of the 200-day moving average could be in the cards over the next couple of days if CPI comes in hotter than expected. Now, I think CPI is going to come in lower than expected, just like PPI did today. But in the event that I am wrong, watch out below. With that said, ladies and gentlemen, let me know what you think about this information down below in the comment section. Have a fantastic rest of your day, and I will see you in the next one.